Welcome to the deep dive. So today we're going to be tackling a pretty enormous topic.
Huge might be an understatement, actually.
Yeah, we're doing a deep dive into the sheer financial weight of London's residential property market.
And the headline figure is, it's almost hard to grasp. We're talking about a total value of 2.64 trillion.
2.64 trillion.
For 3.8 million homes. And that, represents almost a quarter of the entire UK residential market.
And here's the comparison that it really got me. That 2.6 trillion figure is actually more than the entire FTSE 100 combined.
Yeah, all of those companies put together, which is currently sitting at what, around 2.5 trillion?
Exactly. Yeah. So London's houses are worth more than its biggest companies. It's not just an asset class. It's a national economic anchor.
It really is. But of course, that value isn't spread out evenly across the city.
No, I'd imagine not.
If you break it down across the 32 boroughs, you see this huge concentration of value right in the center, in inner London, as you'd expect.
Right, and you can see that in the data. The city of Westminster is, the most valuable overall?
By total value, yes. It's clocking in at 175.1 billion.
But that's not where the most expensive individual homes are, is it?
No, for that you have to go to Kensington and Chelsea. Yeah. The median home value there is just over £1 million.
£1 million. And those top 5 boroughs together, I think it's Westminster, Kensington and Chelsea, Wandsworth, Camden and Barnet.
That's right.
They hold a huge chunk of the total.
A huge chunk, over 700 billion. So that's 21% of the city's entire property wealth in just 5 places.
Wow.
But that's only half the story, really, because that's all about high prices.
But where's the volume, the actual number of houses?
Exactly, and that is all in outer London. It has 56% of the properties.
More than half, and that means it holds, almost half the value, too?
Pretty much, yeah, 49%. So you have this incredible counterbalance. The sheer volume in the outer boroughs is just as important as the astronomical prices in the inner ones.
And you can see that with a borough like Barnet.
That's a perfect example.
It's the highest value outer borough, right? 117.6 billion. But the prices aren't eye-watering. The median is about £562,600.
Right. It's valuable simply because there are just so many family homes there. It's pure volume.
Even the most affordable boroughs, like Barking and Dagenham, they still account for a big slice of the pie just because of the housing stock.
Exactly. So, here's where it gets really interesting, because there's a big contradiction here.
Go on.
We have this colossal valuation, bigger than the FTSE 100.
Yeah.
But over the last decade, London's house price growth has been, pretty weak. It's really lagged behind the rest of the UK.
Hang on. So this whole time we're talking trillions, but the growth has actually been kind of slow.
Incredibly slow in some parts. For inner London, prices have only gone up 10% in a decade.
10%? That's less than 1% a year.
And during that same time, the average UK home went up by 41%.
So there's this decade of relative stagnation just hiding behind that giant headline number.
And the reason is, basically, it just got too expensive. It hit a kind of affordability ceiling.
It priced itself out of more growth.
In a way, yes. So that weaker price inflation means that volume, what's happening in the outer boroughs, is becoming even more critical to the city's overall value.
So what does that mean for someone, looking to buy a home right now?
Well, the source we're looking at calls it a resetting of affordability.
Meaning what, exactly?
Essentially, average earnings are now starting to rise faster than house prices, especially in that stalled-out inner core. And that's creating opportunities for, as they put it, savvy home buyers.
The high end has stalled itself out.
To put it simply, yes. So to sort of wrap it all up, you have this central tension.
Right.
A market that's worth more than all the biggest companies in the country.
But it's being held back by its own high prices, by these domestic affordability issues.
Precisely.
And that leaves us with a really interesting thought to take away. If inner London prices stay more or less flat,
and outer London keeps seeing steady, if not spectacular, growth,
how quickly is that going to redraw the economic map of the entire city? Where does the investment and development go next? It's definitely something for you to track.
It is indeed.
That concludes our deep dive into London's surprising and stalling housing market. We'll catch you next time.